Google and Microsoft ruined the party as their earnings trip up the bulls. What happens next in the markets? That's coming up on 3 Minutes on Markets and Money. Yesterday, the markets rallied right to the 50-day moving average, which, again, this was very encouraging because, as we've been talking about, the important thing here is that the market needed to break above this 3,800 level, which has been kind of resistance ever since the early October rally that failed. Of course, we set new lows very temporarily with the CPI report mid-month. Markets rallied back, got above that resistance level, ran right into the 50-day moving average yesterday. A stop there, and then of course yesterday after the bell, both Google and Microsoft reporting very disappointing outlooks. Microsoft, of course, reduced cloud revenue as well. People are going back to work and needing less services at this point. Google reporting very poor ad revenue. Of course, 2 years after a stimulus-fueled buying frenzy, not surprising that ad revenue is pulling back here more to a normal level of consumption. So again, while disappointing, and those stocks are going to be down this morning, weighing on the indexes because of their size in the indexes themselves, earnings are simply just kind of reverting back to normality. What will be important today is that we begin to see some buying in those stocks, suggesting that maybe some of that bad news has already been priced in to those positions. So again, watching what happens in there at the early going, the market rallies back a bit. What will be important today is that the markets hold this 3,800 level that we broke above yesterday. So we're about 50 points above that now. The S&P is looking to point down about 30 points or so this morning. So the initial open this morning, not tragic, but again, we need to hold that 3,800 level. If we can do that and then rally back to the 50-day and clear that, that sets the market up for that rally to about 4,100 and a retest of the 200-day moving average. Now, don't expect that in the next week or so. That's kind of our target for the year end, is to get back to that level. Again, moving into November, December, of course, we have year-end rebalancing, we have mutual fund redemptions, and then window dressing going into year-end. So there is still some potential here for the market to lift. Now, a failure of 3,800 today, tomorrow, or Friday will set the market back up for a retest of the 20-day moving average. We really don't want to see that the market becomes trapped in this much lower range. We need to start to see some better action. Now, again, next week, we've got the Federal Reserve, potentially some better language about slowing the pace of rate hikes. That could help provide some lift to markets. The week after that, we've got the midterm elections. A gridlock Congress could also help markets here a bit. Historically, that is the case. So again, watching this action over the next few days will be very important to see how the markets are responding and if some of these bad earnings are priced in or not. Now again, today we've got Meta coming out. Expect disappointment there on ad sales as well because they're very closely tied to what Google does. And then on Thursday, we have Amazon, which also has a very big cloud component in their business, which could see some softness in that revenue as well. Could see some damage there in terms of Amazon over the next few days. Long term, I think these companies are great stocks to own, but again, we need to get through this period to find out where those bottoms actually are. I'm your host, Lance Roberts, 3 Minutes on Markets and Money. Be back tomorrow.